The time by Caracris is 6 p.m. and this is CBX Business News. The business news headlines are brought to you by QMax Wealth Management, making more possible. Inflation risks rise, the Bahamas outperforms, and a new Fed chair faces an early test. Good evening and welcome to CBX Business News for Tuesday, May 26, 2026. I'm Rashel Moncrieffe. Thanks for joining us. Coming up, the Bank of Jamaica warns that an oil crisis could threaten Jamaica's inflation outlook, with price pressures possibly breaching the central bank's target range. Also ahead, the Bahamas post 3.8% economic growth, outperforming International Monetary Fund projections. And later, the new Federal Reserve chair faces an early test of monetary policy as inflation risks and market expectations build. Stay with us as we unpack these stories and more right after the break.
Caribbean dreams, instant turmeric tea. What you put in is what you get out. What you put in is what you get out. Yeah. Build up your body, boost up your brain. Take on the world now. Say bye-bye pain. Caribbean dreams, instant turmeric tea. Be good to you. Caribbean dreams, instant turmeric tea. Distributed by Amalgamated Distributors Limited.
This project marks the celebration of our 30th Hall of Fame and aims to highlight the achievements, challenges, and invaluable lessons of those who have shaped and are shaping the future of our economy. Our aim is to celebrate the voices and stories of 30 remarkable leaders in Jamaica's private sector. Join us as we explore these narratives of resilience, leadership, and vision.
The local news is brought to you by Derrimon Trading, better from the start. The Development Bank of Jamaica, facilitating economic growth and development. Caribbean Flavors and Fragrances, Tease the Senses, and Pulse Investments. Welcome back to CBX Business News. We begin with fresh inflation pressures threatening to push Jamaica beyond the central bank's target range. The Bank of Jamaica BOJ says inflation is projected to rise above the 6% upper limit of its target range during the third quarter of this year, driven largely by higher oil prices and widening cost pressures across the economy. While headline inflation stood at 4.3% in April, Governor Richard Biles says growing supply and cost pressures are expected to push prices higher over the near term. He was speaking earlier today during the bank's quarterly press briefing.
Inflation in Jamaica is therefore forecast to trend upward over the June to September 2026 quarters, beyond the 6% upper limit of the bank's target range. This will be mainly driven by supply and cost pressures, including 1. Increased energy and transport-related inflation due to rising crude oil prices, and 2. The second-round impact of higher energy-related inflation on prices of other goods and services, coupled with higher spending related to post-hurricane reconstruction efforts.
The central bank governor says global instability and domestic recovery spending are also emerging as key threats to Jamaica's inflation outlook.
The risks to inflation are assessed to be skewed to the upside, which means that inflation could be higher than projected. The main upside risk is a more extended and broader conflict in the Middle East, resulting in further increases in international commodity prices and their subsequent impact on domestic prices. In addition, adverse weather conditions, including the effects of El Nino, could place upward pressure on agricultural prices. Higher than projected inflation expectations could also contribute to inflationary impulses. Further, higher inflation may arise from a stronger than anticipated impact of higher domestic spending amid the post-hurricane recovery activities.
Meanwhile, the central bank says escalating tensions in the Middle East and rising global oil prices are creating fresh risks for the country's inflation outlook and broader economic stability. According to the governor, higher crude oil prices are expected to place direct pressure on electricity, transportation, and fuel costs, increasing the likelihood of wider price increases across the economy.
The rise in international oil prices is expected to place upward pressure on electricity costs in Jamaica. Domestic gas prices have already risen and may accelerate further, with implications for transport-related inflation. Beyond these direct effects, higher energy and transport costs are also expected to contribute to second-round increases in the prices of other goods and services across the economy.
That was BOJ Governor Richard Biles. The government of Jamaica is intensifying efforts to lower operating costs and strengthen Jamaica's manufacturing sector through expanded duty concessions. Speaking at the Jamaica Manufacturers and Exporters Association conference recently, Industry and Investment Minister Senator Aubin Hill encouraged manufacturers and small businesses to utilize the government's Productive Input Relief Program. Hill revealed that concessions granted under the program amounted to approximately 82 billion Jamaican dollars last year.
We have something called Productive Input Relief for manufacturers. We're expanding the range of people who are in that list, where if you are manufacturing and buying equipment and material, we will allow you to bring it in without any custom duties or charges. In fact, last year, the Productive Input Relief, we brought in 82.2 billion. Rather, we allowed duty to be forgiven for an amount of 82.2 billion Jamaican dollars. It's a lot of money, and a lot more of you can use it. Everyone, whether you are buying a 2 million piece of equipment from Germany or Japan, or you're buying, 6 mixers to start a juice business, all of that you can get productive relief on it.
Meanwhile, Jamaica's business minister says that the country's long-standing trade imbalance is undermining growth and must be urgently addressed. Senator Hill says Jamaica has operated with a negative trade balance for more than 6 decades, a trend he argues continues to drain economic opportunity and limit national prosperity. He is urging the country to move aggressively to build a stronger export culture and reduce dependence on the domestic market.
When I look at Jamaica's trade data, I see an imbalance that cannot be allowed to persist. For 61 years, we've had a negative trade balance. It has grown bigger and bigger and bigger. The last time we as a country had a positive trade balance was in 1966. Sugar was strong and bauxite was good. We need to get to a place where we are watering down that negative trade balance. So that huge perennial negative trade balance is a problem that we have to solve. That gap represents lost revenue, lost jobs, and lost national prosperity.
Hill says reversing Jamaica's decades-long trade imbalance will require more than policy support.
The only sustainable path to closing that gap is to build an export culture in Jamaica which must result in exporting a lot more.
That was Industry and Investment Minister Senator Orbin Hill. In financial news, the Jamaica Public Service Company Limited JPS is reporting weaker first quarter earnings as lower revenues and tighter liquidity weighed on performance. The utility company posted net profit of $6.4 million for the quarter ended March 31, 2026, down from $12.8 million in the corresponding period last year. Operating revenue declined to $240.4 million compared with $265.9 million a year earlier. Gross profit also slipped to $95.5 million while operating profit fell to $22.8 million from $30.1 million. JPS says net finance costs climbed to $16.1 million, contributing to the weaker outturn. The company also reported a significant reduction in cash and cash equivalents, ending the quarter with $55.4 million, down from $202.9 million at the end of December. We move to the latest updates from the JSE equities. In Tuesday's trading session, the JSE market activity resulted in the trading of 117 stocks, of which 36 advanced, 69 declined, and 12 traded firm. Leading the winners are Paramount Trading Jamaica, Margaritaville Turks USD, Innovative Energy Group, and MPC Caribbean Clean Energy, while leading the losers are Margaritaville Turks, MFS Capital Partners, Productive Business Solution USD Ordinary Shares, and Kintyre Holdings JA. The main index declined by 2,050.18 points to close at 342,938.07 points. The junior market index declined by 22.97 points to close at 3,089.75 points. It's time for the Market Education feature, brought to you by CARICRIS, Regional Ratings, Global Standards. In today's Market Education feature, we're talking about acquisitions. An acquisition is a transaction in which one company purchases most or all of another company to gain control of its operations and assets. Businesses pursue acquisitions for several reasons, including expanding into new markets, increasing market share, reducing costs, and achieving economies of scale. Acquisitions may also provide access to new products, customers, or specialized expertise. In some cases, companies acquire competitors to strengthen their position and improve efficiency within an industry. That was the Market Education feature, brought to you by CARICRIS, Regional Ratings, Global Standards. And that's it for the local news segment. Please stay with us. The regional news is up next. The local news is brought to you by Derrimon Trading, better from the start. The Development Bank of Jamaica, facilitating economic growth and development. Caribbean Flavors and Fragrances, Tease the Senses, and Pulse Investments.
Caribbean Flavors and Fragrances Limited has been a part of Jamaica's manufacturing landscape for over 20 years. By crafting unique flavors and fragrances, we have become a part of your favorite household and food items, such as beverages, ice cream, household cleaners, and much more. Known throughout the Caribbean for the highest quality, we continue to innovate with strong leadership, a dedicated team with integrity. We go the extra mile for our customers. Create the next taste sensation. Contact us at 876-9235-111 or visit our website, Facebook, Instagram, or LinkedIn pages.
How may I assist you today?
I want to open an account for me and my son.
That's great. Let me see your documents. I understand you want to know about our savings account. Let me show you a few accounts and the benefits of each account.
Why do you need so many documents from my mommy?
It's called KYC, Know Your Customer. This helps us to protect you and treat you right. Thanks for the documents. Take a look at this brochure. Let's discuss savings accounts. A savings account is an interest-bearing deposit account. Customers with savings deposit accounts are covered up to $1.2 million per ban, so you don't have anything to worry about.
This financial literacy tip is brought to you by Bank of Jamaica, promoting financial inclusion. For more information, visit our BOJ Real Talk playlist on our YouTube channel.
Welcome back. And now for the regional business news. The Bahamas has delivered another year of stronger than expected growth, outpacing earlier International Monetary Fund (IMF) projections as tourism and construction continue to power the economy. New data from the Bahamas National Statistical Institute shows the economy grew 3.8% in 2025, with real output rising to more than $14.6 billion from $14.1 billion in 2024. Nominal economic activity also expanded by 7.3%. Tourism remained a key growth engine, supported by strong cruise arrivals, private island developments, and continued investment by major cruise operators. Construction and domestic economic activity also contributed to the expansion. At the same time, the report showed improving labor market conditions, with unemployment falling to 9.3%, while inflation continued to moderate. The Statistical Institute says improved tax collections and sustained tourism demand are supporting growth, but warns that higher oil prices and global trade tensions remain key risks. In the meantime, the IMF is keeping Haiti under close economic watch, extending a key monitoring program as the country confronts a deepening security and humanitarian crisis. The International Financial Institution has approved the third review of Haiti's staff-monitored program and extended the arrangement through June 2027. The decision follows an IMF review in April, which found Haiti had met all program targets through the end of 2025, including benchmarks for revenue collection, international reserves, monetary financing, and social spending. The IMF says the extension is intended to preserve macroeconomic stability and support reforms during the country's political transition. However, it acknowledged that security conditions and limited institutional capacity have slowed some reform efforts. The fund described Haiti as remaining in a severe crisis, with gang violence continuing to disrupt economic activity. An estimated 5.7 million people are facing food insecurity, while about 1.45 million others have been internally displaced. The IMF also warned that higher global oil prices linked to Middle East tensions are increasing fuel import costs and adding pressure to public finances. Despite those challenges, international reserves remain adequate, supported by strong remittance flows, and are projected to reach about $3.4 billion by the end of the 2026 fiscal year. In other news, the Caribbean community CARICOM is courting deeper economic ties with Germany, noting that stronger partnerships are critical to the region's next phase of growth. The appeal came during the recently staged inaugural German Business Forum for Latin America and the Caribbean in Santo Domingo, where Director of External Trade at the CARICOM Secretariat, Joel Richards, urged German businesses to view the region through what he called the lens of opportunity. Richards says The Caribbean must become more investment ready, improving coordination among member states and creating a stronger business environment to attract capital. He highlighted that the region can no longer afford to remain in discussion mode, calling for a shift from conversation to commitment and from declaration to deal making. Meanwhile, Richards warned that small island states continue to face pressures from trade disruptions, climate change, and geopolitical tensions, making strategic partnerships essential. The forum brought together policymakers, investors, and business leaders to explore opportunities in renewable energy, digital transformation, manufacturing, agribusiness, and the blue economy. It's now time for news from the Trinidad and Tobago Stock Exchange. Overall market activity resulted from trading in 24 securities, of which 6 advanced, 6 declined, and 12 traded firm. Today's winners are Unilever Caribbean, Ansa McCall, JMMB Group, and First Citizens Group Financial Holdings, while leading the losers are A.S. Bryden & Sons Holdings, National Flour Mills, One Caribbean Media, and CIBC Caribbean Bank. Trading activity resulted in the following movements. The All-TNT Index advanced by 6.29 points to close at 1,446.30. The Composite Index also advanced, but by 3.34 points to close at 1,005.92. The Cross-Listed Index gained by 0.02 points to close at 74.85, while the SME Index remained at 81.70. And we take a short break, but please do stay with us. The international news segment is up next.
I'm trading stocks to achieve my financial goals.
I'm also trading stocks to achieve my financial goals.
Start a conversation with the Jamaica Stock Exchange.
Check jamstockx.com for information and a list of registered stockbrokers. You can also call the Jamaica Stock Exchange at 876-967-3271 for information on how to begin. I am achieving my financial goals.
I'm achieving my financial goals.
Welcome back. In international news, a new era at the U.S. Federal Reserve is underway under Chairman Kevin Warsh, but investors are already watching closely to see whether his reform agenda can withstand mounting inflation pressures and growing geopolitical uncertainty. Warsh was sworn in last Friday as chairman of the Federal Reserve, signaling what could become a meaningful shift in how the U.S. Central Bank communicates policy and responds to economic risks. Speaking during his swearing-in ceremony at the White House, Warsh outlined plans for what he described as a reform-oriented Federal Reserve aimed at strengthening institutional credibility and modernizing the central bank amid a more uncertain economic environment.
Our mandate at the Fed is to promote price stability and maximum employment. When we pursue those aims with wisdom and clarity, independence and resolve, inflation can be lower, growth stronger, real take-home pay higher, and America can be more prosperous. And no less important, America's place in the world more secure. To fulfill this mission, I will lead a reform-oriented Federal Reserve, learning from past successes and mistakes both, escaping static frameworks and models, and upholding clear standards of integrity and performance.
But the new chairman has stepped into office at a difficult moment. Ahead of his confirmation, Warsh suggested that productivity gains driven by artificial intelligence could create room for lower interest rates and stronger economic expansion. However, that outlook is facing fresh pressure as inflation remains elevated and geopolitical tensions, including developments involving Iran, add uncertainty to the economic landscape. With Warsh set to chair his first Federal Open Market Committee meeting on June 16 and 17, markets are increasingly divided over whether the Fed will move toward rate cuts, hold policy steady, or maintain higher borrowing costs for longer. Meanwhile, central banks elsewhere are also warning that longer-term economic forces could reshape labor markets and business competitiveness. Canada's central bank says the country is facing a new economic reality, one that could fundamentally reshape trade, employment, and business competitiveness. The warning comes from Bank of Canada External Deputy Governor Nicholas Vincent, who says policymakers must prepare for structural forces that extend beyond traditional economic cycles. Providing an update on the state of the Canadian economy earlier today, Vincent argues that the North American nation must increasingly diversify export markets and expand trade relationships to strengthen economic resilience.
Global trade will continue to be reshaped. We need to keep seeking out new trade partners, diversifying our exports, and finding ways to make Canadian businesses more competitive. The weakness in employment over the past year has been concentrated in the sectors most exposed to trade with the United States. So we need to make it easier for the affected workers to transition to other sectors and to upgrade or broaden their skills.
He also pointed to artificial intelligence as another major transition facing the labor market.
We also need to keep a close eye on the rise of AI. The pace at which it's evolving and the fact it could automate many tasks naturally makes people anxious. We can see this in our consumer surveys. Past ways of innovation have ended up creating more jobs than they have eliminated. But they still cause a lot of disruption and difficult transitions for many workers.
That was Bank of Canada External Deputy Governor Nicholas Vincent. And in Europe, renewed tensions in the Gulf are also tempering investor appetite across equity markets. Germany's DAX 40 closed roughly 0.8% lower at 25,184 on Tuesday, ending a two-session rally as investors locked in profits and grew increasingly cautious over renewed tensions in the Gulf. Optimism surrounding a potential U.S.-Iran agreement weakened following fresh U.S. strikes on Iran and regulatory threats from Tehran, developments that pushed oil prices higher and revived inflation concerns across European markets. Despite the decline, enthusiasm surrounding artificial intelligence-linked industries helped limit broader losses as investors continued favoring select technology and industrial shares. Among the biggest decliners were MTU Aero Engines, Deutsche Bank, Fresenius, and SAP. On the upside, Zalando gained 2.3%, while Infineon Technologies rose 0.8%. Eon added 0.7%, and Continental advanced 0.6%. And that's it for the international segment of the newscast. The news recap is coming up on the other side of the break. And now to recap our top stories. In the local news, BOJ says oil crisis threatens Jamaica's inflation outlook, warns inflation could breach target. Regionally, the Bahamas outperforms IMF growth forecasts with 3.8% expansion. And internationally, new Fed chair faces inflation and monetary policy test ahead. Those were the stories making today's CBX Evening News. On behalf of the entire production team, I'm Rashel Moncrieffe. Thanks for watching CBX, your region, your business, your source.